Good morning. Today is Thursday, February 4th, 2021, and this is Office Hours with the South Florida Business Law Group. I'm Kai Jacobs. I'm the founder and owner of the firm, and we conduct these office hours once a week to answer your questions as business owners and operators. This week, we're going to answer a question that was posed last week concerning stimulus payments that are being issued by the government and whether or not they are taxed as income. Did a little homework over the week, and the short answer to that question is no. The longer answer to that question is it's better than no. Not only is it not going to be taxable income to you, but it's going to end up being a tax credit. And that actually has some positive outcome for you as a taxpayer. So it means not only will the stimulus amount of money you receive not get added to your income for purposes of calculating your taxes, but it ends up being a dollar for dollar set off against your final tax bill, which means it actually reduces the amount of money you're going to be liable for tax-wise. And that's better than a tax deduction. And now we're going to get a little bit into the weeds on the difference between deductions and credits because it does help to understand that distinction. A tax deduction under the IRS code will reduce the base income that's currently used to calculate your taxes. A tax credit works at the bottom line to operate to set off against the final taxes. And here's how that works. And these are really general gross abstractions, and they don't account for other forms of income or pre-tax savings or set-offs or deductions that apply and all the reasons we typically hire accountants to prepare our returns every year. But as a deduction generally, let's say you get a $1,000 stimulus payment and you make a $50,000 salary. You would be taxed under a deduction as if you had earned $49,000, meaning the deduction applies to the income to be taxed. And at a rate of 12%, that means you would be taxed $5,880. As a credit, you would get taxed at the full $50,000 of your salary. And then you would get $1,000 off of the ultimate tax bill. So for instance, if you earned $50,000 a year, like in the other example, and you were taxed at the same 12% rate, you would have a tax liability of $6,000, which is $120 more than the example I gave you if you got a $1,000 tax deduction. But because it's a tax credit, you would receive $1,000 off the tax bill at the bottom. So you would only owe $5,000 in taxes, which is $880 less than if the stimulus check was counted as a deduction. So then, of course, this begs the first question: who's entitled to get one of these stimulus checks and for how much? And I'll go only into the most basic of information, and we can get far more into the details and the weeds on this next week. But entitlement is based upon your 2019 tax return. Single people making less than $75,000 are currently going to be entitled to a $600 stimulus payment. That's going to go down $5 for every $100 that is earned by a single person over that limit. If you're a couple, you're entitled to up to $1,200 if you have an adjusted gross income of $150,000, meaning $75,000 roughly between the two of you. And then, of course, if you're a family and you have children who are under 16 who live at home with you, that can increase the amount of money you'll receive to about $600 per child. Adult dependents are not going to count in that equation. And we can get into all of the criteria, a little more detail next week, but those are sort of the general parameters. And of course, as you know, there's a potential new stimulus bill that's also going to be coming out. So there may be additional considerations to talk to next week. So thank you for listening, and I'll take questions.